Hi, good afternoon. Okay, wait for a while before we start. I think today is the first time that we have the Positive Monday at 3 o'clock. Usually we have it at 10 o'clock, right? So there are some changes by the department. Second time already, yeah? Okay, sure. Now today I will be sharing more about the CPF, all right? And some of you, those who are about 55 and above, you can also consider and learn some of this sharing may be applicable to you. And those who are below 55, obviously you still have a chance to learn what you have on CPF and how you can help your client to buy and to sell. But we'll be covering very fast for today due to the limited of time. But at the end of the session, Vincent will share with you more about our other program, which able to enable you or empowering you to be a better HDB agent or even project agent and resale agent. We have much more comprehensive training for those people who are keen. I will let Vincent to elaborate more at the end of the session. All right, shall we begin? All right. Now today's topic is talking about CPF limitation versus the HDB. The title seems a bit strange, but I think you will know more about CPF and how it's related to HDB when you buy and sell, especially for those people who are buying a HDB flat that's less than 60-year lease. Okay, let's start. Show you a video clips on the HDB. All right, that bear with me. This.
If you're planning to sell your HDB flat, here's what you need to know.
Thank you.
When you sell your HDB flat, here's where your sales proceeds will go. Are your mortgage loans fully paid? If not, your sales proceeds will first be used to pay off the outstanding loan. If you finance your home with your CPF savings, you will need to refund part of the proceeds to your CPF ordinary account. This amount consists of the principal amount withdrawn from your ordinary account to pay for your home and the accrued interest you would have earned if these savings had not been withdrawn. For those over 55 years old, the amounts refunded will be transferred to your retirement account up to the full retirement sum. These amounts include the principal amount withdrawn, the accrued interest you would have earned, and any property pledge if you had made one. Any excess above the full retirement sum will be returned to you. Part of your proceeds will also be used for other outstanding payments. Once all of the above have been settled, any remaining proceeds will be paid out to you in cash. So you might be asking, why do I need to refund the principal amount plus accrued interest when I sell my flat? When you use your CPF savings to buy a home, you are using money meant for your retirement. Upon selling the property, refunding the principal amount plus the accrued interest to your CPF account helps you have the same amount of retirement savings as there would have been if no withdrawal was made. Restoring your retirement funds this way means you'll be better prepared to meet your needs during your golden years.
Okay, the session ends here. Okay, let me continue the sharing. Now, basically, CPF fund is very useful for all of us. So, especially like people like you and me, we are self-employed. Sometimes we do not contribute enough CPF. But I can reassure you that if you have contributed your CPF in the earlier year, your retirement can be well assured that you have a certain sum that keep in your CPF. all right, from your special account to your retirement account when you reaches the age of 55. That will consist your special account and your ordinary account, part of it, to meet up with the minimum requirement. All right, I will share more in detail later on. Then the CPF also in your OA account can be used for financing your house. And obviously your MediSave account will help you for all the medical insurance and others that you can make use of it. All right. Now, I think it's important also to be aware, especially those who are your client, you need to be able to understand that the CPF contributions of the 17% by the employers are important. And this will be based on your salary, supplements, contribution. Right, just hold on for a while. Now, also for your loved one, probably when you are retiring, your loved one, your family member may give you some financial support, contributing into your third of your income when you retire and a household living in a HDB flat. Now, likewise, the government also do contribute part of this CPF top-up bonuses, all right, every year, every now and then you can hear, and 2019 and also this year also. Also, CPF also help you to unlock certain value in your property by providing some incentive through the buyback scheme or the silver housing bonus. Silver housing bonus basically for those who are 55 and above, who want to downgrade into a 3 rooms or 4 room, you get addition of 10,000 to 20,000. From the sales proceed, you top up maybe probably 30,000 or 60,000. There will be additional 10,000 to 20,000 top up into your retirement account. And that will help you to have extra income from there, all right? And obviously, the CPF also offer different targets, retirements, income supports, which I'm going to cover as you go along the way, all right? Now, the 3 things you need to know about CPF nomination. Some of you may be aware of it, but some of them may not be. Now, CPF nomination actually allow you to distribute your CPF saving according to your wish when you pass away. All right, this is very important. If you have not done so, then you better do it. All right, because you may not want your third party or whoever come and challenge about whoever. The will not always the will should not be used to use it to claim your this so-called your CPF balance. So the default mode of CPF nomination is cash. So your nominee means those people that you have nominated, your wife, the children, will receive the CPF saving due to them in cash or in check or in Xero. So do not listen to other people that you will not receive your family will not able to receive. That is not true when you are not around anymore. Now, a will, remember, a will not cover the distribution of CPF saving after death. So you need to have your nomination. But if what happens if you don't have your nomination? Your saving will be distributed to what? In Texas law of the certificates of inheritance. All right. So some of these things you need to know. All right. The will not oversee it. Right. Now, we use our CPF basically for public housing schemes and others for purchasing a property. Obviously, you can also use for your private property using your CPF to purchase, to finance all or part of the HDB flat purchase, and also service your monthly loan installment, paying stamp duty and legal fees of the purchase. Now, also pay others HDB costs such as flats upgrading costs. All right, so these are important that you need to know. Now, obviously, part of the CPF also used for past, this housing scheme is that when you book a BTO flat, all right, when you want to go and tikam, you pay $10, you go and try your HDB BTO flat. Or when you want to book your HDB flat, the option fee, you need to pay $2,000. You can make use of the CPF also, all right? Then when upon signing the agreement with HDB for the lease, these are some of the things that you need to pay: the down payment, the legal stamp fee, the conveyance fee, the caveat fee. But caveat fee, I think you have to pay by cash. Then obviously when you collect your key, all right, from HDB for BTO flat, You can also pay for your lease, your mortgage, and also you can also use part of it to buy. Now you also need to pay for the cash at this time for the fire insurance. Okay, or your monthly installment where you can use the annual compulsory CPF to pay for your monthly installment, and also your housing loan. You can also use it to buy other things for your this CPF. So there are a lot of usage. So it's good that you have enough CPF in your account. Now the other thing about CPF that you have is actually patched against the purchase price of or the value of your HDB flat that you purchased at the time of purchase, which is ever is lower, whether it's valuation or the purchase price, whichever is lower. Now take for example a purchase price of 420,000, the valuation is 400,000. All right, you may want to know what CPF will do based on this. That's why when you buy a house, accept that you're paying fully by cash. If not, you need a valuation report to justify how much CPF can you use to purchase your flat. But you're paying cash, then you don't need a valuation report. All right. So in this case, we use the value which is 400,000 instead of your purchase price. If your purchase price is 420,000. So anything different between the valuation and purchase price is cash over value. You have to use cash and you cannot use CPF. All right, which is the valuation limit. That means for CPF can be used is 400,000. All right, up to 400,000 you can use CPF to pay. So in other words, you can use up to 100% of the CPF to purchase the house. All right. Now another thing that you need to know about CPF limitation is that the withdrawal limit, right, which include the over the period of terms of interest, all right, up to a maximum of 120% of your purchase price or valuation price, whichever is lower. So in this case, the valuation price 400,000, you multiply by 120%, which is 480,000, meaning your CPF plus money installment plus interest all add up to be is 480,000. You can utilize from the CPF account. That is the maximum withdrawal limit, all right? That is the latest update from 10th of May 2019, all right? Now, there's something I learned while I'm preparing this slide for you, the condition of valuations and withdrawal limit. Now, if you were to take a HDB loan to buy a new flat, there's no limit. You can use CPF until loan is fully paid. That means not the 120% doesn't apply here. Now, if you buy a HDB flat resale or DBSS, design and build, all right, and it's based on value limit. So if you are below 55 of age, they set aside the basic retirement sum, all right? And if you are using a bank loan, then whether it's new flat, resale flat, or DBSS, there is a limit, all right, for your CPF, either the value limit or the withdrawal limit, all right? Read up more, go into the CPF website, you can read up more of all this. Now, another interesting thing for those who are turning 55 of age. Now, what happened when you are 55 of age? Imagine that you're turning 55 in this year, 2020. All right? Part of your this SA account, that means your special account plus your OA account, will be converted to a retirement account. Now, it will be used as below as a minimum sum. The minimum sum can come in three ways. The basic retirement account, which all of us need to meet this minimum basic retirement. All right, for those who have more CPF, you will go into your full retirement sum, which is 181,000. Now, for those people who want to have more money at the age of 65 to able to withdraw, you may want to adopt the enhanced retirement sum. All right, 271,500 for this year, 2020. And for the year 2021, all right, the basic retirement sum is 93,000. There's always an increase about 3% every year, all right? Due to what? Due to inflation, the cost of living are higher. So that's why the basic retirement, now we have to keep at least 93,000 for next year. And the full retirement sum is 186,000, and for the enhanced is 279,000, all right? Now, obviously, the more you keep, the more you will get the pay up. All right, so there are actually 3 types of payout when you come to the age of 65. Your retirement account will start paying out. So the money payout could be higher for those people adopt the standard plan. All right, the money payout will be higher. The basic plan more or less will pay you, but at a lower level money payout, but it will stretch longer. Then the escalating plan, basically every year there will be increase of 2% money payout to you. Right, in the event if you are not around, you pass away or whatever, your beneficiary is able to collect some part of this sum back from you in your retirement account. All right, so far clear? Let's move quickly. Now, this is also another plan where you see your retirement sum with CPF plan pay out most. Which one pay out most? Some of you may want to know at the age of 65. All right, the standard plan basically pay more every month between 1,002 to 1,004. But those people who are using the basic plan, they will pay less, but they will stretch longer. The escalating plan basically also pay less, but you will keep more for the future, where you can live beyond 90 years old. So whichever plan you are planning for yourself, for your spouse, study all these what that suit you. For myself and my wife, we choose the standard plan. That means every month we'll get more money. All right. Now, I will explain further over here which CPF life payout option should you choose. So some of the recommendation over here is that I myself and my wife took the standard plan. For a person who believes that he or she can live beyond age 85. So the standard plan may give you a better, better payout. All right. And for the basic plan, basically give you a higher return for a person who passed away before 85 of age. Then escalating plan, basically is the return of escalating plan is the lowest actually, unless the person can live beyond the age 95. So that means they'll keep a lot more for the later part of the year. All right, but I don't think I can live beyond the age of 95. So I choose the standard. This is one of the reasons why I choose that. Right. Now, also very important, there's an update on this HDB usage of residential property and housing loan. So we're going to cover a bit more here because I'm going to spend time with you, because a lot of us will encounter this problem, and probably not only you but your client encounter this problem and may have asked you some of these questions. So if you have understand the subject better, you could able to share with them. All right. Now, what happened to a house that's when you have purchased a flat before 10 of May last year, 2019, remaining lease 60 years or more, buyer can use actually the CPF to pay for the property up to the valuation limit. All right. And those lease that less than 60, that means 30 to 59, buyer can use CPF if the remaining lease property can cover the younger buyer and at least until the age of 80. That was last year. And obviously, those that are below 30 years, you cannot use a CPF. You have to use cash to purchase if you need that. That includes HDB as well as private. All right. Now, what happened after that 10 of May 2019? Or there are some changes. The government restructured it to use a CPF much more effectively. Now, remaining lease of the property must be at least 20 years of it. 20 years balance lease can cover the younger buyer until at least till the age of 95. So you can obtain the maximum CPF usage up to value limit. But what happens if you don't able to meet that? So it become a prorated CPF base, or the extent of the remaining lease of the property can cover the youngest buyers of the age of 95, right? I will elaborate more as you go along. I will give you a chart too, so that you can make use of it. And this chart is done by none other than Simon Yu. All right, later I'll show you. All right. But the key consideration is to whether the property can last the buyer for life or not. So this is what the reason why they restructure the CPF usage. So for CPF board, basically to make the account for increasing life expectancy. Now, actually, 3 out of 4 Singaporean female, I'm talking about female, age 30 today, will still be able to live alive, and let me still be around at the age of 80. That means 75% of the women, all right, 3 out of 4 will be able to live beyond 80. Now, we are increasing the benchmark to the age of 95 to encourage more buying of a home for life, to set the same as the existing rule for the 2-room flexible or short lease flat for the leasing of a buying back scheme. Now, the other thing is that this will also protect 4 in 5 households from outlive their home. So it's very important that at the retirement age or the older age where you are sunset, you want to have a roof over your head. You don't want to end up where one day, I mean, touch wood or anything happened to you, that your children don't want you, but you still have a roof over your head. But what happens if you choose to stay with your children? The other house that you have, be it a 2-room, 3-room, or 4-room, you can still rent it out and get a passive income. So imagine that you get from CPF at the same time the rental. So actually it's actually sufficient for the couple or the spouses together to able to have self-sufficient instead of depending on the children. All right. Now, majority of Singaporeans will not be affected because of this scheme. 98% of the household for HDB, all right, and also 99% of the private property household have a home which cover them to 95 or beyond. Currently based on the survey. Now, CPF withdrawal rules after the age of 55 with a property. Now, do you remember when you're 55, what happened? Your RA account will be converted, your SA account together with your OA account will be converted into a RA. That means your minimum sum have to be kept aside. So your withdrawal CPF savings from your basic retirement scheme, all right, which just now we covered earlier on. If own a property with a remaining lease of at least 30 years, that was previous scheme. Now the new scheme is if own a property with sufficient remaining lease to cover the owner until at least the age of 95. So this is a new scheme that we are adopting, right? Now HDB loan, you also need to take note. Property with remaining lease of less than 60 years. What happened? Previously was loan to value limit below 90%. But after 10 of May 2019, 90% loan to value limit if the remaining lease of the flat can cover the younger buyer to the age of 95. Otherwise, loan to value will be prorated from 90% based on the extent of the remaining lease that cover the younger buyer on the age of 95. All right, I'm going to tag on something because there is a link here. Okay, I'm going to show it to you very quickly. I'm not going to explain everything inside the CPF board. All right. So over here, there's a calculator. Why I'm showing you this scheme is that I want you to log into CPF board, the website, look into this one, the tool. All right, inside got many calculator. Make use of that calculator, input whatever you need to input together with your client. But before you do it with your client, do it to yourself. All right, this will help you to calculate how much CPF can you utilize, how much loan can you use, and all this. Is that clear so far? All right, I will go back to my screen again. Okay, next. Now, property cover younger buyer to the age of 95 and above. All right, so if you are able to meet this requirement, so you can use a CPF whether for private or public housing. All right, it will allow you to use until the valuation limit. All right, and the remaining lease at the point of purchase. First of all, when you want to use a CPF, you also must at least, the house balance lease must at least 20 years. Now, for HDB loan and for public housing, loan to value limit to up to 90%. And the tenure, okay, short lease, that means the number of years you want to repay your loan is normally we calculate based on 25 years. Now, why 65 years minus the average age? Because 65 years is the year that we can continue to use our CPF to pay, take out a loan. If you're beyond 65, you want to take out a loan, bank will not lend you, and likewise HDB will not lend you. All right. So you minus the 25 years, which is you cannot borrow any loan. So by the age of 65, you have to repay all your loan. So far clear? Right? Now, the also thing is remaining lease at the point of purchase must be at least 20 of the year, because beyond 20 years, you cannot take up any loan. Right? Now, those flats that, what happened that when you want to utilize your CPF to buy a housing, taking a loan or using a CPF, when it's below 95 years of age. So the valuation limit to prorated according to the extent that remain the lease that cover the younger buyers using CPF to the age of 95. So the remaining lease, same thing, minimum must be 20 of year. So loan to value is also 90 year, but prorated based on the extent. If you are below, cannot meet to the age of 95, the younger buyer. Now, loan tenure, shortest, same thing like earlier on, the shortest is 25 years, and up by the age of 65, you have to repay all your loans, all right? Now, I give you some example over here, the calculation. Now, the case scenario of using your HDB housing loan. Now, loan tenure basically is 25 years, but what happened is over here that 65 minus the average age of the buyer. So if you have two buyers, 30 and 34, average 64 divided by 2 is 32. So 65 minus 32, you have the 33 years. So it's more than 25. Then what happened if your lease, remaining lease is only 55? So 55 minus 20, all right? So you still got 35. So these are some of the tests that you want to do. So meaning that you still can take a loan tenure of 25 repayment. That means you have 25 years to repay your loan. Now take another example, all right? A more elderly couple, buyer between 40 and 42, combined together 84 divided by 242. Now, by the age of 65, you have to pay off, right? Remember? So 65 minus the 42, you got 23 years to repay the loan. You got me so far? So if your loan tenure is 25, but you have to pay off by 23 years. So far clear? So in this case, the maximum loan period that you can repay is 23 in this scenario. Now, what happened when you want to purchase a HDB flat for a 4-room flat? 430,000 and balance lease is 50 years. All right? And it will cover the younger buyers, which is 45 until the age of 95. So 50 and 45 can live up to 95, right? So this one qualify. So using the existing system, all right, actually you can only use 80%, all right, which is 344,000. But under the new policy, you can use 100% because you met the 95 year. It means the youngest buyer is 45 and the balance lease is 50. You add together is 95. So you can use 100%, all right, of the CPF to pay off. Whereas for the loan, no change. Don't confuse with the loan. HDB loan, no change. It's always 90%. All right, of the valuation of purchase price, whichever is lower. So far clear? Let's move on. Now, another scenario. This is the youngest couple now. They want to buy a flat. Now, the flat is not less than 60 years, but above 60 years. Same thing, 4-room flat, 430,000. The balance lease is 65. But what happened? The younger age is only 25. Oh, they are 25. So 25 plus 65 is only how many? 90. So if you look at the charts below, all right, the old policy can use up to 100%, but the new policy only up to 90%. So in this case, your CPF, you cannot utilize 100% to pay your CPF, pay for your house. You only can use up 90%. Don't forget the loan. If this is affected, a younger person who want to use the CPF or take up a loan, HDB loan, you can go up to 90%. But for this case, they will cap at 81%. So some of you, hey, how come, Jonathan, you know so well? Everything you memorize? No, there is a charge to use. I'm going to share with you this charge. And this charge, I said earlier on, is done by our boss, Simon Yu. All right, he computed this earlier year. So he shared with us. So I would like to share with you. Some of you may not be familiar with this charge. Okay. Now, this is a chart that Simon have done. Right. Maximum CPF usage on valuation, all right, on valuation, all right. So these are basically the remaining lease. How much CPF can you use? All right, if you have met the minimum age, that means you look at it. If you are already 55 years of age, you can use 100% because you already set aside the minimum sum. All right, the basic minimum sum. Then you can use the 100%. So far clear? So this chart later on, if those people who need it, I will share with you. I will pass it to our learning department. They will send out this email to you, all right, with the attachment, so that you can learn and apply it. Now, what happened when you want to take up a loan? Remember the loan earlier on, I'm talking to you up to 80% or 90%, whichever. But for CPF housing loan, you can take up to 90%. But how about bank loan? Bank loan, no. Bank loan, you cannot apply this one. It's only up to maximum of 75% based on the buyer's age. So far clear? Yeah, I'm going to pass on quickly. So just now you saw the chart earlier on regarding about the CPF withdrawal limits, and also the loan that you can use. So remember, when the flat is less than 60 years and the person who bought it, or even is younger, is the plus together is less than 95. So the use of CPF will be lesser. Okay, your own CPF is lesser. All right, supposed to be 100%, now it's less. Another thing you have to take note is that don't mistaken. HDB grant you a HLE up to a certain say 700,000. So you can tell, oh, 700,000, no problem. But because they're younger age and they're buying an older flat, then the limit of HLE will drop too. All right. So make use of the chart to calculate the calculation, and also go into CPF board using the tool. Remember earlier on, the tool, go into the tool and calculate how much CPF the person can use, how much loan they can obtain. Based on that, you could able to do some calculation. All right, I'm going to show you here also another link, which is quite similar earlier on that we have using the CPF itself. I'm not going to elaborate. All right, the housing limit calculator over here. All right, let's continue here. Now over here, you can see that there is a calculator over here. Remember, I told you about this tool. Go and play with it. At the bottom, you can input in all the detail that you needed, like step 1, what you want to do, this and that, all right? And you do the calculation. You do a declaration here, disclaimer and all these things, all right? For the calculator. So work on it and play with it before you so-called do a financial calculation. Simulate the situation like as if that you are buying a HDB flat. All right, can you do that? Okay, let's go back. The other one is the housing usage calculator. Okay, I will not cover here. I will pass. All right. How come my slides again hang? Now, bear in mind that the HDB basically also using the HDB loan itself. We need to just hold on. Let me block my slides. Okay, HDB buyers financial calculation. Now, before you go out to help your client, first of all, you need to know that whether they are HDB loan eligibility, can they take out a HLE? Now, one very important thing you need to take note is whether they are PR. If they are PR, both of them PR, straight away HLE do not apply to them. All right, or they have previously owned a HDB, owned a condo or private property, and they just sold off less than 30 months. So in that case, they cannot take HDB loan. They can take a bank loan. So these are things that you need to know whether do they qualify for a HLE. Now, why I ask this question, very important. If they are qualified for HLE and they're applying a HLE, first of all, they must have a HLE before they go and buy a HDB resale flat. If you find something like, and the HLE is still in process, the seller cannot issue an OTP to the buyer. while waiting for the HLE to be approved or granted. So far clear? Unless the buyer want to use a bank loan or commercial bank, then you need not wait for the HLE. So if HLE come later, then it also cannot be used anymore, because at the point of issuing the OTP, the buyer must have the HLE. Obviously, they need to have the intent to buy too before you can do that. A buyer may come to you and say, oh, I have no loan and everything. I don't need loans. I have a lot of CPF. But don't forget, remember earlier on I mentioned, if they don't need loan and fully pay out the house, as long as they touch CPF, they need to have a valuation report. All right. So after issuing the OTP, the buyer need to register to request for valuation confirmation from HDB and need to pay about $120. So far clear? The next thing you need to look into it is also the available of cash, if there be any, and some of them don't have cash. Then you have to be very careful to guide them whether should they buy a 4-room or 5-room. Later I'm going to give you an illustration to see the scenario whether this person can afford to 4-room or 5-room where they have limited cash. Then CPF money, obviously they need to check how much CPF do they have in their ordinary account. All right, and also CPF housing grant, if there be any available for them as a young couple, a retiree, whatever. All right, let's cover a few of them together. I get stuck again. Okay. Now, home loan eligibility. Now, bank loan eligibility. Now, bear in mind, the HDB loan and the bank loan, they're slightly different. Why take a HDB loan? Why take a bank loan? Now, I'm going to cover this for you so that you can take note. For a bank loan, minimum down payment, 5% must be cash. On the purchase price or valuation, 5% must be cash. 20% come from the CPF or cash. So far clear? For bank loans, maximum can take out how many? Loan? 75%. Sorry, let's go back. Okay, 75% and not 90%. Now remember, for SPR, that means PR, they need to pay 5% additional buyer stamp duty for their first residential property. So obviously their monthly installment is either by CPF and cash mixed. Now, so far clear? Bank loans are 5% plus 20% of minimum down payment, then maximum up to 75% loan amount, right? Now, what happened to HDB loan? HDB loan, the down payment is 10%, and this 10% can be all CPF, or if they are able to eligible for the CPF housing grant, and this can be used, the CPF housing grant can be used for the down payment, right? And the couple can take up maximum of 90% loan from HDB. Again, you have to calculate, but if you're buying a newer flat, like 5 years, 10 years, should be no problem, because if 5 years they are 20 plus, they should be able to outlive the 95. So, the roof will be able to provide them up to 95 of age. So they can take up to maximum loan of 90%, and they can use all their CPF to pay for the house itself. All right. And not forgetting to calculate the buyer stamp duty, which is 3% less 5,004. All right. I am assuming that the flats is purchase flat of HDB flats is less than $1 million. Down today, HDB flat, some of the houses purchase price is over $1 million. In that case, the stamp duty calculation is slightly different. Anything beyond, all right, is 4%, all right, that's 15,004. Now, some of you may want to ask, should I take a HDB loan or bank loan? So some of the things that you need to take notes, HDB loan versus bank loan, what are the advantages? Remember, HDB loan, you can use all CPF. Remember, you can loan up 90%, all right? And the interest rate for HDB is 2.5% plus 1, which is 2.6%. All right. And HDB loan also allow you to do a capital repayment for your outstanding loan. And also HDB also allow you to adjust the monthly repayment amount, especially when those people facing some challenges like now currently COVID-19, some of them lost a job, this and that. All right, so it's always good to keep some money in your CPF ordinary account and not use up all to pay out your loan. Keep about 20%, because in your ordinary account, the first 20,000, you 3.5% interest rate. If your HDB loan is only 2.6, then I still suggest that you keep 20,000 over here. All right. Couple, that means each one can keep 20,000, so no issue. So even during this crisis, you have been retrenched, you lost a job, your money installment need not come up cash, but CPF can settle it. All right, provided your amount that you purchased the house are not those that 900,000, 800,000, where your money installment $3,000 to $4,000. All right, compared to bank loan, all right, the interest rate is very low, but don't forget you have to come up cash 5% on the valuation of purchase price, whichever is less. Okay, there's some correction here. This will be 75%. Sorry, let me go back to that. Yeah, the maximum loan amount is only 75%, not 80%. Some correction over here, so bear in mind. So obviously you can use CPF or you can use cash to pay if the amount is not enough. But it's not so easy to refinance or do calculate. You have to follow some of the bank's policies and term and orders. All right, it's not suka-suka, can redemption, you can do partial repayment. No, you have to read on the bank itself. Maybe after first year or second year, then you can do a lump sum payment if there's no penalty. And not forgetting, you have to give 90 days notice if you want to redeem minimum. Otherwise, they have extra charges. So good and bad. Bank, cheaper interest rate. HDB, higher interest rate. Long term, if you don't think that you will change, then you may want to consider bank loan if you can afford all these inflexibility. But HDB is higher interest rate, that's all, 2.6% based on current. So bear in mind, if the buyer is Singaporean, as long as one Singaporean, you can use HDB loan. But both of them are PR, straight away go to bank loan, don't waste the time. All right, both of them. If even a Singaporean, if they have sold away a private property less than 30 months ago, then in that case, again, go to bank loan. Forget about HDB loan. So far clear? Now, how do we qualify to have a HDB loan or enjoy a HDB loan or some of the grant that we want to get from from CPF? First and foremost, the couple combined salary must not more than 14,000. All right, couple not more than 14,000. For single, not more than 7,000. So far clear? This is the basic criteria. Next is obviously they did not sold away any flats or any private property or own any private property before. If they have owned a private property, what happened? They must sold it off at least more than 30 months. Then they and combined salary less than 14,000. Then they can be considered to able to enjoy this housing grant. All right, which we're going to cover. Now for EC, basically their salary must not more than 16,000 in order to enjoy the 30,000 grant, 20,000 grant, or 10,000. They have a step calculation on this. All right. Now I'm not going to cover this in very detail. So this is part of the HDB eligibility check. What scheme can I enjoy? All right. So again, this one you can go into the website, click on it, check the eligibility of the individual buyer. Which scheme are they under it? All right. Whether applying a new house, a BTO flat, or a resale flat. On the left is a BTO flat. On the right is a resale flat. Right. Some of the financial tools to enable your buyer to prepare for the HLE application. So they may ask you to help them to prepare and submit. So some of the documents over here are the guideline for those people taking HLE. Right. I also don't want to cover in detail. Go back and play with it. I'm going to give you all these PowerPoint slides. You can make use of it. All right. Now the type of housing grant that we can familiar with is a single above 35, which I said earlier on, which is about 50% of the family grant. All right, but their salary must not more than 7,000. So these are part of the scheme we can enjoy. Living near parents, approximately housing grant. up to a maximum of 30,000, but single 15,000 if the parents live in with the parents. But what happens if you don't live in, but they must be able to meet the minimum of 4 km away. Be it the parents applying or the child applying, whoever applies is okay. But in your endorsement, the parent or children who are near to the parent must need to go in to endorse and agree that the next 5 years they will not sell off the flats. If they do sell off and want to must still stay on within the 4 km circle. So far clear? Now there are some clients that may be foreign, because foreigner. It means I'm a Singaporean, I married a foreign spouse. All right, you can still enjoy certain of these grants itself. All right, as long as you have children who are Singaporean, you enjoy most of these so-called housing grant itself. All right, enjoy singles and all these things. Go and read up more about this and how you can entitle. Today, I'm going to share with you 3 types of very common housing grant that you can help your client. All right. Now, first and foremost, the people who are buying a 4-room flat, you can enjoy 2 Singaporean. All right, you can enjoy up to 50,000. If you are buying a 5-room and above, you can enjoy up to 40,000. Now, what happened? A Singaporean married a PR. All right, so you only can enjoy up to 40,000. All right, it means 10,000 less than the 50,000. If you are buying a 4-room flat and below. If you are buying a 5-room and above, then you will get only 30,000 instead of 40,000. Is that clear so far? This is the family housing grant. What about single? All right, you asked me single, right? So instead of 50,000, they're able to enjoy what? How many? 25,000 if they are buying 4-room and below. So if your client is 35 and above and draw less than 7,000 in salary, all right, he can enjoy 25,000 housing grant, CPF housing grant. Then if you're buying a 5-room and above, then he will enjoy 20,000. So far clear? All right. Now, again, if you are a Singaporean, we have PR, they get less 10,000, right? So how to get back to 50,000? You want to know? The 10,000 different. Either the SPR convert to a Singaporean when the time comes, but they will take a longer time. But what happened? The couple have a child, and the child is a Singaporean. You can ask for top up already. The other 10,000, but will be top up into the Singaporean's account. All right, the father account, the wife account is a SC. So far clear? Let's move on. Now, next very important housing grant that is quite a huge amount, which is 80,000. This 80,000 was formerly called the additional housing grant, together with a special CPF housing grant for those low-income people. This combined together now called the enhanced housing grant, which you need to work it out. This enhanced housing grant very unique. It can be used for resale. It can be used for BTO. That means you are applying a HDB flat. If you're qualified, you also entitled to this grant. All right, is it interesting? Now, the criteria, the family buying either a new or resale flat. All right, regardless, whichever they want. Location, no. Household income, only one consideration is 9,000 per month. All right, 9,000 per month. Some of them are very clever. You're working into your head already. What happened? I tell my wife resign. Now we combine income, right? So we resign, but they have a minimum number of months, 6 months to a year, that continue employed with the same company, except for those people who are COVID-19 case and lost a job, and maybe now the husband only one. You can go and try and apply for this enhanced housing grant if you're entitled to. All right, so up to 80,000. So we can try it out and see what that works for your client. Now this one very interesting too, approximate housing grant. Some people are not familiar with this. This approximate housing grant only for resale flat. Only for resale flat. Now what happened in the past was only 20,000 for family, 10,000 only for the single. But what happened? They increased to 30,000 and 15,000. How do they enjoy? That means the extended family, that means the parents stay with the family. Right? 30,000. Then the single, the parent or the mother, whoever, stay with them. Then you got up to 15,000. But again, agents are very creative. They say, hey, very simple one. My mother have a flat, rent out lah. Then can I enjoy the 15,000 or the 30,000 grant? The answer is no. Okay, so they own, if the parents still have a flat, either they sell off the flat, stay with the children, they get 30,000. So far clear? Single, same thing. If the parent want to stay with you, sell away the flat, then they get 15,000. But in this case, if the parent have a flat, do not ask them to sell away just because of the 5,000 or 10,000. Okay, let them have the flat rent it out, so they have a passive income. Remember, I told you, rent it out, enjoy the passive income, and the parents stay with you. But you only get 20,000 as a family. As a single, you get 10,000. Still feasible, right? That will actually serve both ways, because your parent, one day if you quarrel or you're some misunderstanding with your wife and all this, and your parents are not comfortable and want to move back to their flat, they can move back. At the same time, they get passive income both ways. So far clear? Now, in the past, the parent need to stay within 2 km. Now it's increased to 4 km. So the chances of getting this housing grant is very great. Now, one more advantage for this case is that what happens if my parents is private property? Am I entitled to this? Yes, can also, no problem. All right. Or those people previously own a private property and they sold off their private property, buy a HDB flat, they still entitled to this grant. So the unique way is on this thing. So you need to check it out with HDB or CPF board if you're not too sure about this housing grant. All right. Now, type of all the housing grant, here's as a soft copy. Below is the link for all these documents that you need to prepare your buyer if they want to have this housing grant. Because when you go into HDB, when you submit to HDB, you don't have this soft copy and all these supporting documents, then the grant become lengthy. Remember, when you submit to HDB for resale, once all documents are in order, within 8 weeks, you will have the completion. So your housing grant could be taking long time to do because a lot of documents your buyers is not ready. So over here, I'm going to show it to you. Okay. If you click below, you will be able to see some of these. Just hold on. Yeah, okay. Under resale, the soft copy income document to be uploaded if applying for CPF housing grant. So as agent, please help your client how to apply all this grant. All right, the type of grant they want to apply accordingly. Okay, read all in detail. I'm not going to cover here because it's going to be very elaborating unless you're attending a special course that we're going to conduct later. Vincent will share with you more. All right. Just hold on. Again, I'm stuck here. Okay, wait a while. Just hold on. It's not here. It's not supposed to be here. Next. Okay, these are some of all the websites where you can go in and download it, which I already do it for you. So check with all the documents that is required. Even you're unemployed, you are self-employed, you are being employed by the company. What are the requirements? All right, for your HLE, for your grants and all this stuff that you need to apply, and you need to upload all these documents. Otherwise, the grant will not be approved. So far clear? Okay, I already download all this for you, so you can, based on the slide, what are the things that needed when you apply the housing grant. All right. Over here. Yeah. So I'm going to skip a bit here. All right. Whether you're working part-time or jobs or whatever. All right. Those are all the information that required over here. Now, your client want to apply a housing grant over here, whether they are eligible. First of all, they need to go into registration on the intent to buy first. where they have the intent to buy, then later the HDB will also prompt them with whether they want grants and all these things or not. So obviously you have to help them to fill up all this information, especially your buyer, right? Then loan eligibility, whether they are eligible. As I said earlier on, if they own private property or sold with private property for the last 30 months, then in that case, they are not qualified. Must be after 30 months, all right? Obviously, they still can buy a HDB resale flat, but they're not entitled to the grant. That's all right? If they want a grant, must be after 30 months. So this is a sample of a HLE. Now, the HLE, basically, if you look at the date of issue, is 27 of May 2019. And the expiry date at the right below the box there is 6 months from the date of May. 27 is 26 of November 2019. So the validity of this HLE is 6 months. Just remember. Now remember earlier on that I want to refresh here again. All right, if you are taking a bank loan, all right, then it will be 5% cash, 20% CPF, or cash, 75% maximum. All right, is the loan amount. Now, for PR, remember, we have to have a lot of PR, so we have to know what is the criteria. So minimum, they have to hold back for how long? 3 years before they can buy a HDB resale flat. All right, that means a wait-out period. So be it whatever scheme, husband and wife, or husband with the children as occupier, or husband, all right, be the main buyer and the wife and children are occupier. All right, so the buyer, one of them must be essential occupier, must meet the 3 years wait-out period. Meaning one of them is PR, both of them are PR basically, all right? And the children, or child and parents. One married child, some cases are divorce cases, you can see the child or with parents. Some divorce case also can, as long as they have a child which is a Singaporean, then they still can buy, right? Now, maybe I just touch on quickly today on what is Contra. What type of Contra are we talking about? Flat A and Flat B, we call the Contra. For this case, is the enhanced Contra. Now, we are using the selling of Flat A to pay for Flat B. All right, and this case needs to be submitted together, and it's a linkage between A and B. At all times, the buyer of Flat A, you sold it to Flat A, right? You are the seller of Flat A, and you're going to be buying Flat B. You must inform both parties, the seller of Flat B, that you are doing Contra. The buyer of Flat A, you have to tell them you are doing Contra. So the money in the CPF for Flat A will be transferred to Flat B together by the resale office, HDB resale office. Obviously, your CPF, if it's not sufficient, cash is involved. Now, for Contra case, either it must be HDB loan to HDB loan. That means from Flat A, you got a HDB loan. You sell it off, your OTP, you exercise, the person exercise, and you buy a Flat B, you also exercise. So together, you submit to HDB. And for Flat A, you still got outstanding loan, you have to pay off your outstanding loan. Then in Flat B, you have to have a HLE for the Flat B, all right? For HDB, basically for Flat A, after you sell off, sometimes you stay in Queenstown or Commonwealth, you sell off the flat, all right? You may have some HDB loan or so, whichever, but minimum. But because you sold off the flats, you make a big lump sum of money. The next flat you're going to buy may be fully paid off. But bear in mind, you're using CPF, remember? So your Flat B, you need to, what? Do a valuation report. If you don't valuation report, you cannot touch a CPF. Now, what happens if another case is that fully pay out Flat A for the old couple. You want to buy another Flat B to downgrade, also fully pay out. Maybe they are by then they are 55 or 60. Remember the housing loan repayment period up to the age of 65. All right, so they may not have enough money or whatever. HDB also don't want to lend them money. Sorry, they have a lot of CPF and some money. May not have a lot of cash, but they use CPF to pay it off, full payment, but still need the valuation report. Now what happened? The flat A is fully paid up. Then you want to take a HDB loan. Bear in mind, when you buy, taking another HDB loan, there is one calculation that you always remember. Whatever the cash proceed, you may not allow to use up all. You may have to use part of the CPF cash proceed to pay off part of the HDB loan. So don't, after selling flat A, you got a lot of money, then you thought, I can keep all this money, then I go and take HDB loan again. No, there's a calculation that you need to come up some part of the cash, all right, to minimize the HDB loan for the flat B, right? So another one case study for you. What happened? You have a couple who sell off their flat at Petir Road. Petir is Bukit Panjang area, 630,000, and buying a 4-room or 5-room flat at Bukit Batok between 470,000 to 550,000. All right, for a 4-room and a 5-room respectively. Now imagine that the EM, the executive maisonette, is fully paid off, and the total CPF refund is 450,000. So remember, the refund of CPF is 450,000, and the existing CPF original account have a balance of 68,000. So they would like to do a full payment. I say again, full payment for the next HDB flat. That means what? No loan. All right. So calculate their funds for the sales proceed. That means fund for the sales and the purchase. Would you recommend to buy a 4-room or 5-room? Would you possible Contra plan for them? So can they do Contra? Yes or no? Okay, let's see. All right, to save time. Now, solution to this case is basically the selling price of 630,000, including CPF refund, accrued, everything is 450,000. All right, so they have basically the cash proceed of 180,000. All right, assuming this couple is less than 55, if not, some of the money of this CPF refund may go into the what happened retirement account. Okay, so bear in mind they are below 55, right? Now, some of the costs involved may be for legal fee. HDB legal fee is about 550 to 650, around there. So for you as an agent who market the property, your commission is 2%, 13,482, based on the resale price of 630,000 plus 7% of GST. So estimated sale proceed 165,000. All right, minus the whatever the general fee 13,000. You still have some money around here. Okay. The CPF refund still 450,000. Now to buy a 4-room or 5-room, look at it. 4-room. Let's look at 4-room first. Imagine you're buying a 4-room of 470,000. That means the resale price is 470,000. You got a refund of CPF of 450,000 plus another 68,000 currently on OA account. So we have a total of 518,000. Enough to pay or not? Enough, with the CPF is more than enough. Plus even the stamp duty of 8,007. You can use your OA account to pay off this one. Now your CPF basically got 518,000 minus the 8,007. You still got 509,000. Enough to pay for the 470,000. It's more than enough. Then the balance is conveyance fee, the cash cash for option fee, and imagine the cash option fee is 500 lah. Okay, then HDB registration 80,000, request for value 120. Sorry, not 80,000, $80. Request for value is 120. Now the agency fee to pay to use cash plus GST is 5,000 over. So total cash amount, assuming the over here is 6,500 over dollars. So far clear? So can you afford the 4-room? Yes. Any cash? Minimum. Only for agent fee, the 5,000 over plus some miscellaneous. So 6,000 cash only. What happens if you buy a 5-room? All right, possible all in CPF. Now buy a 5-room. Imagine that just now we talked about is 550,000, and the CPF balance after selling flat A, you got 450 plus your cash CPF balance in OA 68, total 518. Now the stamp duty is 11,000 for this case itself. you can use your OA account. Now, the available CPF account is 518,000 less than 11,000, which you pay for the stamp duty, balance 506,900. Sufficient for the 5-room or not? Using CPF, not enough. So you remember the house, they want to fully pay up the house, don't want to have any otang. All right, so they need to top up some cash. So 550, the purchase price less whatever CPF available, 506,900. You're still short of 43,000. All right, plus some miscellaneous, the conveyance fee, the cash option fee, the HDB registration fee, and all this and that. So you still need a total of 50,000. Now the couple have some cash about 180,000. So if they want to make use of this sum, they can make use of it. All right. Don't forget, they also need to use for renovation. All right, and some of them may be retirement, so they want to have some cash with them. So whether to take a 4-room or 5-room, you must explain to them. You must come up with some scenario and some calculation, all right, to able to illustrate your explanation to them. So far clear, I hope you are able to do some simple calculation for your client. Now, enhanced Contra by HDB loan. Only HDB loan you can do Contra. Flat A and Flat B, assumingly you are using a HDB loan again. Flat A and Flat B all are HDB loan or no loan. Some of the scenario we covered earlier on. All right, you need to submit the HDB application within the 7-day apart. If you want to, you can do that between the sellers, first Flat A and Flat B. Now, HDB legal fee for conveyance, you cannot use a bank loan, HDB loan only. And the stamp duty either pay by cash or CPF if OA is sufficient. So far clear for this enhanced Contra case under HDB loan only, right? Or no loan. Now, what happens if we take a bank loan? We cannot do Contra. We call the bank breaching loan, all right? Now, when we sell off Flat A and go and buy Flat B, after selling Flat A, you go to the bank. The bank is willing to lend you a breaching loan to purchase a Flat B. Because during this period of time, probably you need a roof under your head and you want to take a bank loan. Probably your Flat A is also using a bank loan. So you go back to the same bank who will be more willing to help you to give you a breaching loan. Now, this breaching loan is unlike the other loan. That means there are 2 loans. One is temporary loan called a breaching loan or called a term loan. The interest rate normally is higher. Normal bank loan is about 1.5%, but the breaching loan could be 3.5 to 4%. All right, but not to worry because it's only temporary up to a 6 month. All right, so it's about 3% or 4%. But you based on the 3 to 4% divide by 12. All right, how much and multiply by the months when we replay the period is maybe 3 to 4 months. So probably it's about less than a certain amount. All right, so it's the number of months that you use. All right. Now, breaching loan work only with taking the bank loan from the same bank. So we take the original housing loan plus the breaching loan. All right. So obviously you cannot use a HDB lawyer. You have to use a private lawyer to do all this for you. Slightly higher, to about 1,500 to 1,800. Stamp duty either pay by cash or CPF if your OA is sufficient. All right. Now remember, all today what you need to do is remember you must be the salesperson who able to have the latest information on HDB policies and procedure. If you are not familiar with HDB, my advice to you, do not engage yourself into doing it and later come up with problem. And I hope and encourage you to read up more, learn up more. Now what happens if you are still those who are not able to pick up very fast? Obviously, you can check HDB if you want to call their hotline. Another best way on the job training, come and join us. We're going to teach you and guide you and hold your hand for the next 4 months. All right? To help you through this, we have a special program for all those people who are interested. All right? Our mentor, not only myself, there are 3 or 4 other mentors who will be guiding you. And I let Vincent to tell you more about this. All right? Now, if you have any question, put into the chat. I'll do my best and I'll try to answer you. If you want to see me, I'm always on the 9th floor. All right, 9th floor. My room is 0904. Okay, 0904. Okay. Thank you for the class, and just all for this for the day. I wish everybody the best, and anything you need, check with the training department. Thank you. Bye.